Hello everyone, welcome back to TechnoCharts YouTube channel, and in today's video we are going to discuss two stocks that are on the verge of breakout and one is already broken out, right? So the first stock that I am going to discuss is EaseMy Trip Planners or EaseMy Trip. Now in this case you can see that the stock has a pivot point at around 617 or 620 rupees. This is a classical structure of volatility contraction pattern or VCP pattern. So what is VCP? Basically, whenever a stock is moving in a range and the stock forms a base, so that is a base formation where the stock first makes a rounding bottom in a first structure, then there will be a second rounding bottom that which will be smaller than the first, and then there will be the third structure where it will be much smaller than the second one. So this could be four bases, three bases, two bases, or five bases. It could be any number of bases, but the only thing in VCP structure is your base should be always, the next base should be always higher than the previous base, so that your sellers are getting weaker. You should understand that your sellers are getting weaker. Simply to explain you, first the sellers were able to push the price from here to here, then the second time the sellers were only able to push the price from here to here, the third time the sellers were able to push the price from here to here only. So what does this mean? This means the buyers are getting stronger in this case, and they are not letting the price go down and not letting the price cross the previous old swing. So this is a classical structure of a volatility contraction pattern where breakout happens on a very good volume, and breakout should happen definitely on good volume before you enter a trade. So in this case you see there are four base formation where the pivot point is at around 615 rupees. So you can enter this stock above 615 rupees with a target of, first target should be initially, your first target should be at around 680 rupees, that is the high, previous high, and this 720 rupees, that was the previous high, latest point, right? So in this case this is a classical structure of VCP with a stop loss of 547. So risk to reward is okay, and in this case yeah. So the second structure that we are going to talk about is accuracy shipping. So this is a classical example of a range breakout structure where the stock is, whenever a stock is stuck in a range and breaks out, that is known as a range breakout. To explain you in a simple language, for example, if a stock is stuck between the resistance area and support area and the stock is trading in a range like this, and if the stock breaks out on this area, then this is known as a classical range breakout structure. Okay, so in this case as you can see that the stock is in a range and the stock has broken out on huge volumes on this day, even when the market was very weak in today's condition, then also the stock has broken out. So that means the stock has immense strength to move on the upper side. Also the volume was on the favorable side. So generally in case of range breakout, what is the target? We generally project the range of this particular stock. So in this case let us calculate the range. So we generally project the range of this particular stock on the upper side from the resistance. So let us project this on the upper side. So what does the target come? The target comes around 267 rupees, right? So this could be the immediate target of accuracy shipping with a stop loss below 197 or 195 rupees. So that would be the ideal stop loss in this trade. My advice to everyone is not to trade aggressively in this type of market, because market is moving in a very volatile way. So your stop loss may get hit definitely. That is the only thing that you need to care, that whenever your stop loss is getting hit, you should not lose that much of big amount. So keep that in mind, and yeah, see you soon. Thank you. If you like the video, do share it with your friends, and yeah.